Welcome to Daily Wisdom from the Flippening podcast. These episodes feature short, to-the-point clips from our full-length interviews. We talk to the men and women behind the trades, crypto exchanges, and regulations with the goal of helping you become a better, more informed investor.
Hi, I'm Mike Kaplan, editor of the Flippening podcast. Today's episode is from a 2019 conversation with Ed Tolson, founder of kbit, a high-frequency cryptocurrency trading firm. We discuss how his background in computer science and hedge fund trading tech led him to high-frequency crypto trading. For the full conversation, check out Flippening episode 49. Now, without further ado, our conversation with Ed Tolson from kbit. Enjoy.
I'd love to hear a little bit about your background and how you got into crypto. What's your story in finance up to the point that you started kbit? Like, it's not the average person that decides they want to start a high frequency trading firm in crypto.
I think of myself as a computer scientist first. So my parents were both computer entrepreneurs starting from before I was born. So I grew up in a house with a lot of computers. I was always on the computers. And I started coding when I was 10 years old, believe it or not, which seems crazy now. And by the time I got to high school, I knew several programming languages. And I was the guy, programming the Texas Instrument graphical calculator. Maybe I'm dating myself, but if you can remember those things, programming them in high school to play games and things like that. So I've always been kind of a computer guy first, computer scientist first. And I sort of stumbled into the financial industry while I was studying artificial intelligence at MIT. I kind of bumped into somebody who wanted to, quote, apply artificial intelligence to day trading. And that's how I sort of stumbled first into high frequency trading and then spent some time at some large hedge funds. That's kind of how I spent my career, is this intersection between computer science and investment and trading.
Do you have any formal education or background in finance, or is that primarily self-taught through the use cases that you applied artificial intelligence to?
So I didn't take any finance or econ courses at school. I would have if I could go back now. So I learned everything kind of on the job. I got some certifications along the way, but yeah, mostly it was kind of on the job training and learning from others and also some experimentation and trial and error.
Does artificial intelligence currently play a significant role in the work that you do as a high frequency trader, or are there other rules that you primarily deploy?
It sort of depends on the definition of artificial intelligence. So if we're talking about fitting or machine learning, there's a component of that. But really the business of high frequency trading, or probably most kind of systematic trading, is a lot. I tell people it's a lot of boring work. There's a lot of pipes and plumbing and gears and mechanics, and it sounds really sexy. And we trade a lot of volume. It sounds super exciting, and we build trading models, and that part is, a lot of fun. But, a really high percentage of the work and the skill set is sound engineering, robust thinking through error cases and use cases and things like that.
It looks like you started kbit in 2017. Prior to that, you were director of trading technology at Citadel. What was the impetus for you taking the leap? Where were you at when you decided to found kbit?
It was fortuitous and sort of unintentional. So I was on a garden leave period and was basically looking for a side project and something to do to kind of keep my skills fresh and keep myself interested and engaged and in the markets. And I thought crypto would be a fun place to do that. So I really started basically messing around, and I was applying technologies because I wanted to learn them, not because I thought they were going to be the best fit for the job and things like that. But the timing was really great, and I was kind of in position for the kind of 2017 craziness that happened, and it kind of exploded into an actual business instead of a side project right in front of my eyes. So that wasn't really my intent. That wasn't my intent at all when I started it, but it quickly became a real business.
In the early days, or the first days of kbit, was it just you in your house or in an office somewhere with a computer, or did you have a co-founder? Did you raise venture capital? Or is this just purely just like you did something, seemed to work, so you're like, let's recruit more resources to scale this?
Yeah, it was just me for a long time. And with hindsight, I probably underinvested in that way. So, like I said, I started as a side project. I put a small amount of capital into it and got up on a few exchanges. And before I knew it, I was doing material volume and material revenue, and it just kind of reinvesting that and continuing to deploy and expand. And I was working solo for the first year and a half or so until late 2018 or second half of 2018 when I started to add to the team and hire a few people.
That's it for today. If you like what you heard and want to support the show, please consider leaving us a review on iTunes, Stitcher, or wherever you listen to podcasts. If you decide to leave us a review after subscribing, we'll send you a free Nomics t-shirt. Just hit us up on Twitter at username Nomics Finance after you've left the review, and we'll hook you up. You may also be interested in Nomics.com, our crypto market cap and pricing website. Check us out at Nomics.com, spelled Nomics. Now stick around for our legal disclaimer. All opinions expressed by podcast hosts or guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions. The producers, hosts, and guests of the show may maintain positions in the companies or assets discussed today.